Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Japan's inflation numbers are out, but why are they important? You see, the world has gone through a phase where easy money policies have been abolished. Interest rates have hiked, essentially the cost of money, which has gone up across the world, except for in Japan. Now, if you're familiar with the markets, Japan for years had an easy money policy to have some sort of inflation. Now, finally, as inflation went higher across the world, so did it in Japan. The conversations have shifted to when Japan will raise interest rates, and that will have a major impact on the carry trades across the world. Good morning, JK. Your thoughts on the Japanese inflation numbers? Does it make the job easier or tricky for the BOJ? What do you think?
Good morning, Swaraj. Yes, the Japanese inflation number, of course, actually came lower than last month, but it was higher than what was expected by the market. Market was estimating around 1.8%, and it came at 2%, and that is actually the target rate of BOJ as well. But as I said, the influence of Japanese monetary policy change is going to be profound as and when it happens. But that's a moot question, right? When it happens, still market is very much divided. But apart from inflation, the Japanese authorities have been saying consistently that their policy would depend upon how the wage negotiations go. And the wage negotiations results are expected on March 13th next month. So then we have the policy meeting coming up in April. Obviously, the event on March 13th will have good influence on how the BOJ approaches. Definitely, any hint of a change will see a bigger movement in the Japanese yen as well as in the asset markets, which have taken a lot of support from the weekend. That's about the Asian market today. That was the biggest event. Of course, we also have one important event tomorrow in Asia. That's the New Zealand Central Bank policy meeting. And there are some in the market who expect they might actually, cut the rate tomorrow and take the lead among the major nations to change the policy, trajectory. But it's still a divided opinion, and we will see tomorrow as and when they announce. But the whiff of change is there as far as the monetary policy is concerned, although the timing is still a question mark. Otherwise, yesterday was one of those days when we had no meaningful data from any major regions, and markets had meandered in ranges ahead of the big events later in the week. That included even the rupee that consolidated at lower end of its broad range, with the supplies again matching the demand from PSU banks and importers. The exchange traded F&O segment settlement for February takes place today, and we could see a bit more volatility around it as suppliers are forced to adjust their open positions, which we presume are not substantial in view of the low volatility. Expect the USD-INR to get some direction after the raft of data this week, including our own GDP for Q4, second estimate of FY24 full year GDP, as well as the final estimate for FY23, of course, which is quite irrelevant because it's extremely old. Now, the US bond market saw an avalanche of supplies, and in fact, it was a record amount of supply or issuance in a single day, more than 150 billion. But surprisingly, the whole issuance was taken up quite easily by the market. Only the 5-year issuance was somewhat, behind what the market had expected. In other words, the yield that finally came out was higher than what the market had estimated. So the yields at the higher end went up a bit, between 3 and 5 basis points, but that 2-year yields were almost unchanged. The big liquidity that is still sloshing around in the market, as we have seen huge amount of a pile of cash that many big funds and investors are holding, is finding its way into the high yielding US T-bills. That's why we have seen a good response to the issuances yesterday. Apart from the US Treasury, we also had blue chip companies in US selling a record 172 billion of bonds in February. after the falls in yield, fall in yields had encouraged them to borrow more from the market. And so that's a massive amount of liquidity that is going into the bond market. US stocks, of course, ended with modest losses on Monday as focus have shifted to the economic data ahead after having been seeing a big rally fueled by AI companies. Now, after the dull Monday, we have plenty of data that starts today. We have the January durable goods data, home price data, as well as we also have the consumer confidence from the conference board, which will be quite important from future perspective. We, of course, had the Japanese inflation already. Then we'll have the inflation from Europe and core inflation from USA on the 29th of this month. So all of that is very closely focused upon by the market. Then we also have the specter of another threatened government shutdown in the US in the absence of a bipartisan approval of funding plans. High-level agreements, rather high-level disagreements over policy issues with political angles have prevented an agreement being arrived at by this time. However, it is hoped that, as in the past, a consensus will emerge eventually just before the Saturday deadline. Finally, some hint of a good news from geopolitics. US President Joe Biden said on Monday he hopes to have a ceasefire in the Israel-Hamas conflict in Gaza start by next Monday. And, indications are that the warring parties have been closing in on a deal during the negotiations in Qatar, that which is brokering release of hostages as well as stopping of bombing. Hopefully that good news ends this week of big events. Thank you.
Thank you, Jack. And just quickly summarizing, when it comes to Japanese inflation number, they were lower than the previous sprint, but higher than the expectations. Now, the key thing for the Japanese policy would be how the wage negotiations go. The outcome is expected on March 13, followed by the rate decision in April. So that's something to keep a close eye on. When it comes to rate decision, New Zealand Central Bank will be meeting tomorrow. It is expected that they might cut rates tomorrow and take the lead of rate cuts in the DM segment, although the market is pretty divided into whether or not they will cut rates. For rupee, we have been seeing some consolidation at the lower end of the range. Today is also the monthly FNO expiry of the currency contracts. We can expect to see some movement post that data. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the